Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Checking in on the dollar and gold, the dollar is still very strong, and we are approaching the high that we've seen on this move. And this is the hourly chart, and I drew a support line where we consolidated and hit a low, and then continued to the upside. And then I've got two resistance lines, one at a recent lower high of 101.83, and then the high we've seen in this move, which was up at 102.05. So we look at the daily time frame, and we can see a clear bull break from consolidation. And it does look like a bull flag, and we'll draw that real quick where your support and resistance lines are parallel. And again, I did draw this in another video, and it wasn't exactly parallel. It was more like a wedge, but either way, it's a bull break. So we had that tightening range, and then a clear bull break to the upside, and here we are heading back towards recent highs. And of course, if the bulls break 102.05, it will be back to the highest price we've seen in 13 years and show tons of strength. We do have the Fed meeting coming up on Wednesday. That's going to have a significant impact on both the dollar and gold. So we can expect a lot of volatility on that day, and we can expect the miners to see a lot of volatility as well. So checking in on gold, the hourly time frame, extremely weak. And there's been all kinds of red flags. We have uptrend lines that have broken. We could draw those in here, and we could see the bear break where we saw a tight, and then a clear break to the downside. And then from there, it's just been nothing but lower highs and lower lows, with a new low that we've hit. So the low before was down at 1156.97, and we just dropped down to 1156.15. So the bulls are trying to defend this area. We closed the week right down at that level, but obviously there is a very, very clear trend favoring the bears at this point. And we need to be aware that on the daily time frame, we've been highlighting the fact that the RSI on the daily time frame does usually bounce from these levels, and the fact that the dollar is at 13-year highs is a bit of an exception. That's the reason that we're not seeing the usual bounce that we do see. So the RSI has been oversold now for weeks, and we've got the bull MAC decross that happened by default, as I pointed out, just because we were kind of trading sideways when that cross happened. But the bears are still in control, and after looking at this 10-day moving average resistance now, we've got rejections multiple times. And especially this past week, we rejected 3 out of 5 days. So the 10-day moving average resistance is now important for me on this chart, and the bulls have to turn that into support on the daily time frame to be looking for some upside. This is just a trend line I had from back previously where someone was saying that all of the analysts were expecting gold to break out when Trump became president, and I corrected them and said it wasn't all analysts, it was all fundamental analysts, because technical analysts could see there was a very clear downtrend on the daily time frame for gold, and there's your Trump rally, and there's the rejection, and then a dump. So technically speaking, gold was all in a line in terms of staying in the trend that it was before the election and just continuing to the downside with further weakness. So where do we stand from here? The bulls must see a rally on Wednesday to turn this trend around and see an oversold bounce back towards 1200. If we don't, where are we headed? We need to look at the weekly time frame and zoom out to find the next support levels. And once we broke 1200, that was a huge red flag for the bulls, as we pointed out. because of the lack of support, because of how significantly and how quickly we moved to the upside from pretty much 1100 all the way up to 1250. So I'm looking down at 1164.17. We're below that level. So the next clear weekly support I'm looking down around 1125. There's been some price action around that level, some resistances. We could see it act as support. But really 1125 and 1115 would be the target if we see a bearish reaction to the Fed this week. And we need to be aware that the weekly RSI is approaching oversold, and we would need to keep an eye on that. We have seen 5 red weeks in a row. But as of right now, that is certainly the trend. And we can see that by looking at the bear miners. And we haven't seen huge moves in either direction, although Friday certainly favored the bears. It was a kind of day where we had just a clear, slow and steady uptrend for the bears all day with really no question. The 20-period 5-minute moving average for JDST and Dust held the vast majority of the day. There might have been 1 or 2 candlesticks that closed below that support level. But we bounced off the 50-day moving average support for JDST. Now we're back over the middle Bollinger Band, and the bulls see an next resistance up here at 40.55 and 41.25, and they're going to be looking to continue to higher highs if gold does break down. And we look at Dust, and it's a similar bullish reaction. Back over the middle Bollinger Band. Resistance on Dust is 58.93 and 60.41. And we check in on the bulls, which are certainly struggling, losing the middle Bollinger Band support for JNUG, increasing bear volume, closed down near the low of the day, and just a couple supports here, 606, 619 are 2 support levels we're looking at here on JNUG. And you look at NUGT, and it's only really 720 and 730 as supports. So rejection from the middle Bollinger Band daily resistance on NUGT. No doubt about it that the trend belongs to the bears right now, and it's going to require the catalyst on Wednesday to save the bulls. So we'll see how that plays out. We'll certainly be checking in every day as we head into Wednesday. I appreciate you watching and hope you have a good weekend.